How you doing, Ryan? Good to
Yeah,
good
good,
to see you.
good. How are you?
I'm good, mate. I'm good. Obviously, today you're talking about Bitcoin in Monday's Fat Tail Daily. We had a bit of a break from you last week. You've been working on something which we're going to hopefully be releasing in the next few weeks.
Yeah,
You gave way to the mining story last Monday, which was pretty big too. But mate, today can I just set the scene? Because I guess the key theme in your piece today is that you're kind of comparing Bitcoin with a land like property. So before I go into my first question, can you just explain what you mean when you liken Bitcoin to property?
yeah. So I mean, I suppose the example of land or oil or something, a commodity that has some scarcity value to it. So I think the quote I used at the start of today's piece it sort of says how there was a huge rush to buy up prospective oil land in the 1800s in the US because of the underlying oil. And so oil is a scarce commodity. It's a physical commodity. Land is a scarce commodity. Everyone probably knows that that's what gives land its value, the perceived scarcity or the scarcity within certain locations. What's the old real estate saying is that they're not making any more of it. Land, it's there. Buy the worst house on the best street because of where the land is. There's all these sort of little tidbits of wisdom that reflect the market's ability to value something that's scarce. And
Mm.
in the commodity realm and the property realm, that's a physical asset. Bitcoin is a digital commodity. It's a commodity of sorts. It exists. It doesn't exist in physical space. It exists in cyberspace. It exists digitally, and yet it has that same property of scarcity. There's only going to be a certain amount of Bitcoin released over the next 130 odd years. We've already released about 19.5 million Bitcoin in the last 12, how many years is it? 15 years.
15, yeah.
And so that only leaves about 1.5 million of new Bitcoin set to be released over the next 130 odd years. So there's scarcity there. Now, some people watching right now, skeptics might say, well, just because it's scarce doesn't mean it has value. No, that's true. Just because something's scarce doesn't mean it has value. But you have to understand that the scarcity aspect of Bitcoin is part of what drives its value. The fact that there can be only so much, and like any market, when people come to value something for its inherent properties, and more people come, so you get this sort of snowball effect of, not many people think it's worth something, then more people think it is, and then more and more and more people. Then you've got supply rising into a market where there's only so much. Demand rising in a market where there's only much supply to go around. And like any commodity or digital commodity, when you get that supply-demand imbalance, the price has to rise. And people might not know this, but Bitcoin right now is scarcer on a stock-to-flow ratio than gold. So everyone knows that gold has some monetary value because of its scarcity, because you can't just create it out of nothing. It's hard to find. It's hard to mine. Bitcoin is scarcer than gold on a stock to flow ratio, and that only happened earlier this year when we had the halving event that we probably talked about back in April, where the supply of new Bitcoin fell in half. So there's less new Bitcoin coming on board. So that's part of the thing you need to understand about Bitcoin. It's not the whole story, but it's part of the thing that you need to get your head around, that it is a digital commodity, and as such, the scarcity aspect of it drives some value.
Yeah, because most people view it as some kind of technology, right?
Yeah,
Yeah, yeah.
that's probably the mistake most people make at the start of seeing it as a tech stock. It's a it's like the Nasdaq. Just because it's a technology doesn't mean it is. This is the thing that maybe people find hard, is that there's a technology aspect to Bitcoin. It's a decentralized system that uses cryptography and different aspects of computer technology to create a system where no one controls it, no one owns it, and yet you can transfer value over it. So that's the technology aspect to it. But then there's the monetary aspect to it, the fact that it is the world's first digital commodity. It's a scarce asset that exists in cyberspace that has held its value pretty well over any long time frame, over time and space. It can be transported anywhere in the world within minutes for a very cheap cost. So there's a lot of aspects to Bitcoin, and there is that technology aspect, but then there is that monetary aspect and that commodity aspect, and that's the thing people sometimes struggle with. You need to look at it from both angles, and there's other angles to look at that. For example, there's a big story playing out in America right now where a big venture, this wasn't in today's piece, but there was a big venture capitalist called Mark Andreessen, who people might have heard of. He's famous for coining the term that internet will eat the world, in the 90s before the dot-com boom took off. And he made a lot of money from the dot-com boom. He came out recently and said that 30 of the startups his fund is invested in were debanked under the Biden administration. They lost access to their banking. And the only reason was some of them are crypto companies, but some were just fintech companies. And they were just cut off from all the banking at a moment's notice with no recourse, no explanation, just got cut off from banking. He unveiled that on the Joe Rogan show recently, and that's led to a bunch of people in America saying the exact same thing. Their company was just debanked by the banking system, potentially because they had some crypto links or some links to aspects of fintech. Even Melania Trump, who's Donald Trump's wife, she was debanked. And you probably remember Nigel Farage was debanked in the UK last year as well for political reasons. So what this is exposed is, because everyone says, well, what's the point in crypto? What's the point in Bitcoin? The banking system works just fine for me. But what people are starting to find out about is that, well, there's a political element to banking where you can be cut off from your banking because whoever's in power at the time decides to disagree with your politics, or in the case of a lot of the stuff Mark Andreessen was talking about, was to protect the banks from competition. There's no other reason you can see for it. And it's hidden behind these layers of bureaucracy where people have no recourse to do it, recourse to find out even why they've been debanked. They're just cut off from banking. So the amazing thing to me is that how many crypto companies actually survived the last 4 years with this active, enforcement and sort of sabotage happening behind the scenes. And yet they've survived, and now they're at the point of potentially thriving.
Mm. Well, you draw a parallel between Bitcoin and the Marcellus shale land grab. I guess another one is the Manhattan metaphor, where Bitcoin is that land underneath Manhattan, and then the altcoins and the other projects that are coming up are the buildings and the rails of the new system, right?
Yeah, that's right.
Yeah.
I mean, let's think of the early days of Manhattan. Imagine what your great granddad or whatever had bought a little block in Manhattan and kept it for you till now. You'd be very wealthy, because again, the scarcity aspect comes to it. The same is potentially true of Bitcoin as well. You're buying a scarce unit, a fixed amount of units in a scarce digital commodity, but Bitcoin, as good as it is, has some limitations from a technology perspective. It can't allow everything that everyone wants to be able to be done on it. It can enable a lot, and as a monetary unit, it's unsurpassed. But technologically, there are companies and other crypto projects building on top of it to make it a little bit more efficient from a usability point of view. And I think an example would be, when Manhattan sprung up, you could have made money from buying land, but you could have also made money from investing in the likes of Thomas Edison and his electric company and stuff, which turned the lights on in Manhattan. So there's a few ways to play an investment opportunity, which is like an undiscovered frontier. Let's put it that way. So Manhattan, or America in itself, was an undiscovered frontier times, and the opportunities were huge, but there was a lot of risks with that. You had to deal with the Wild West and cowboys and competition and politics and immigration and a whole bunch of curveballs to deal with. But beneath all that, the financial opportunity was huge, and that's why the last 2 centuries has been the rise of the American century, because they fostered that sort of innovation and entrepreneurship and that sort of capitalist ethos that you need to invest your capital to make money. You can't just sit on it, do nothing. And so that's where the other crypto projects might come into it. So you got Bitcoin as that steady, hold your land bank it, wait 10 years and you'll probably do very well. If you want, the chance of bigger gains or the chance of faster gains, you can look at the technologies building on top of the sort of foundations of Bitcoin.
High risk too, of course, because you've got to figure out which one's going to actually work out.
And you should mention that there's a million scams in crypto.
Yeah, exactly.
The mistakes most people make in crypto is by coming in a bull run and just getting carried away with the potential gains and never taking the time to understand what they're actually investing in. If they're lucky, they make a bit of money and they'll cash out. If they're unlucky, they'll make a bit of money and lose it all and never really understand what they're investing in. So you need to come in with a base of knowledge, and that's why Bitcoin's so important to understand. Because if you don't understand the scarcity aspect of it, you don't understand the technology behind it, you don't understand the digital commodity aspect to it, you're going to struggle to realize, the value in these other crypto projects as well. What are they adding to that equation? Because most of them, 99% of them are probably not adding anything. So you might make money trading them, but you're not going to make money investing in the right ones. Yep. And yet there are a key subsection of crypto projects which are building real things, which are creating real value, and they're very undervalued compared to their potential.
Yeah, exciting. So, but I guess that with the new administration coming in, which is kind of a bit of a curveball. I remember when we did your prediction report, it was in the depths of the bear market in August 2022.
Yep.
I guess back then it would have been very difficult to foresee the pro crypto sort of feeling in the new administration, right? But it just kind of plays into the new cycle, and you kind of highlight one aspect about where we are in the cycle in the new one is that you highlight that Bitcoin is still below its performance in the 2018 and 2021 cycle, but yet you're still suggesting that this cycle is fundamentally different from the last ones. Can you just explain why very briefly?
Yeah, right. So you're right. So Bitcoin goes through these cycles, ups and downs, say they're 4-year cycles. And if you look at the current price movements, as good as they are, I mean, Bitcoin rose $26,000 last month. It was the biggest monthly candle ever in dollar terms. We're still tracking roughly on average in previous cycles. So the funny thing to me in that situation is things have just changed like in the last few months. I didn't think we would have a pro-crypto president in the White House so soon. I thought it would maybe be 2028 by the time that happened. I was hoping that maybe a Republican-led administration would be a bit more hands-off than the Biden Democrats because they were actively attacking it. I thought, well, crypto can even survive being actively attacked, but it makes it harder. An administration that just stands off will at least give it time to grow out its utility, show the world how useful it is, and sort of integrate its way in organically. So that's the path I thought it would take. And I thought, well, we're probably heading for a cycle where things go up just based on that. But what's changed is that President Trump has been ridiculously pro-crypto, not more than I would have expected. He's launched his own decentralized finance project. He's talked about setting up a Bitcoin strategic reserve. He talked about that in the campaign, but he's talked about it after he's got elected as well. So this is not just all campaign talk. The Wall Street Journal has just put an article out today. I saw saying that the White House's war on crypto is over, and the SEC, the regulator, is about to drop all impending cases against crypto companies, which is massive because there used to be all these cases that dragged on for years that just would halt the growth. Imagine you're a crypto startup. You're trying to create something useful to the world.
Well, it sends capital that you otherwise would spend progressing things elsewhere.
Exactly. Speak to a super fund manager in Australia or a fund manager. They will still be in the mindset that, I can't invest in crypto. It's too risky. I can't touch that. What is about to change, I think, and what's starting to change is that the regulatory risk that has been over crypto for many years is just falling away. And that is the number one risk from professional money managers. I think the new administration is putting pro-crypto people in charge, or at least people who see the value of crypto, of competition, of decentralized finance, of cheap, efficient fees, of the ability for people to self-custody, because it does make vast improvements on the financial system. And I think when they do that, and they're going to do that, and they're setting the regulations in place, that's going to allow swathes of capital that was always too scared to do it before to do it, because they will say, well, this is regulated industry now. This is a legitimate industry. And so they're going to start looking at, what projects can we invest in? Do we invest in Bitcoin? Is there other crypto assets we should invest in? And there have been companies that have forerun this already. I mean, Deutsche Telekom, who, massive telecom company in Germany, it already, I think, has some crypto exposure and does staking, which is a way of securing the network and earning income. They already do that. The banks are starting to try and put some Bitcoin in their balance sheet. Not all the banks in America, but some of the banks in America are starting to try to get some exposure. BlackRock are putting Bitcoin exposure to a lot of their funds. So you're just seeing this sea change in thinking. So let's put all we've talked about today together. You've got digital scarcity. You've got this concept of digital scarcity, and then you've got demand, not just from retail people like me and my subscribers in the normal wave, which was already looking pretty bullish. Suddenly, you're getting the capital of Wall Street and potentially Hong Kong, China, Australia, super funds, European funds, all looking suddenly to get into an asset which they had previously been forbidden to invest in because it wasn't regulated. Suddenly, a regulated industry from a standing start where a bunch of people have almost zero exposure to an asset class which has limited supply. So that's why I'm so excited about. I think I've talked about this before. It could be like a quantum leap in adoption, where banks have to say, well, this is a level playing field now. We can't rely on a regulatory moat to protect us. We need to find out about this technology and invest in it, which I think we'll do. And the funds that are not exposed to it may find themselves losing customers because they'll fall behind to the funds that do get a head start on this. So that's the risk they're playing now. The old saying in sort of professional investing circles was it used to be too much of a risk to have Bitcoin exposure or crypto exposure. I think in next year it'll be too much of a risk not to have some, because if you don't have it and your competitor does, and you're making less money, you lose funds, you lose your livelihood. So, talking
about that risk, it's sort of that related, and you touch on it in your piece today. Is talk about risk is insurance industries. You know, their whole business is risk, right, and assessing it and stuff like that. But yeah, and you say the insurance industry is growing interest in Bitcoin as a hedge against sovereign debt default, right? I find that really fascinating. So just a couple more questions on your piece today. Like, how do you see this institutional adoption potentially differing from previous ways of corporate treasury adoption that we've seen? Like for example, in El Salvador, that's like a national adoption type thing. But now the insurance industry is getting into it. What are your thoughts on that?
Yeah, that Bitcoin bond idea of insurance companies buying Bitcoin is super fascinating. It's very complex, and I've probably not got time to go into
fair enough
today. But if you think about it, like if you're an insurance company, you're looking at a multitude of risks that you have to manage, and from one like really important risk is all your contracts are in dollar terms. You know what I mean? So all your contracts are in, let's say, fiat, but let's say dollars for the sake of ease. Now, if we get dollars being debased over time, which is inflation, which is what inflation is essentially, then they have a mismatch between liabilities and assets now in the future that they've got to manage. So one idea that is getting discussed by serious people now, and I was talking about this 4 years ago when I interviewed a Canadian bond trader called Greg Foss, but this is now getting talked by economists at big, Ivy League universities and, government economists. The idea that on your bond offerings, you can have a Bitcoin component to hedge your long-term risk. So the idea there is that over time, the Bitcoin that you have grows to make sure you don't have the risk of your fiat money not being enough to cover the risks in the future. So that's a super fascinating idea of using you can maybe do the same thing with gold or in previous times, but the fact that they're talking about doing this with Bitcoin now is very interesting. And again, that comes to that game theory of if some insurance companies start doing it and it works, they've got an advantage over the insurance companies that don't. And so, it's a very complicated thing, though. I think I don't want to get too deep into it now.
Fine, absolutely.
It's just another, like you said, what are insurance companies doing? So a lot of people are skeptics of Bitcoin still. There's probably people watching today, if they're still watching, are still got a million arguments why not Bitcoin, right? Or why it won't work or whatever. Just realize that if that is your position, you've been wrong for 15 years and you're falling behind people that are taking the other side of the argument. So if you're someone like me that listens to markets, potentially you need to update some of your thinking. But also bear in mind that you're not just on the wrong side of people like me now. You might be on the wrong side of insurance companies that are professional risk managers who are taking the long side of this trade as well. And you're on the other side of potentially governments, even the US government, that are building reserves in Bitcoin. So the naysayers are not just taking on a few like crypto nerds and, like sort of maverick finance types like me. They're now taking the other side of the bet from the people that they more naturally align with. Government, insurance companies, funds, corporate adoption. And it's still at the beginning stages of that. But like I said, there's a game theory. If you don't go first, the later you go, the more you miss out. If I'm right, there's always a chance there's something wrong. But that's the interesting thing now. If you're against Bitcoin and crypto, you're not just betting against me now. You're betting against a lot of other entities, and I think over 2025 you'll see just how many entities you're taking the side against. So
fair enough.
good luck.
That sounds like a very bullish case. So I'm just going to end on obviously bull markets in Bitcoin and cryptos. They often have super sharp, vicious pullbacks, right, and very quick ones. So for investors interested or trying to build positions. And I know you've touched on this before, but it's worth reiterating in case, we find new people across YouTube or whatever. How would you suggest they manage that risk and don't get too excited? And,
I've got a Bitcoin Investors Launchpad series, which is a course you can take, a 4-week course, which will give you how to do this, but not just how, but it'll give you the knowledge so you understand what you're actually investing in and how to make it a sensible part of your portfolio and things like that. But just to cut to the chase, it's something like dollar cost averaging into Bitcoin is a good way to start. You've got a certain target amount of Bitcoin you want to own, and you invest a regular amount every month. You buy Bitcoin on a Bitcoin exchange and you take that into your own self-custodied wallet for safekeeping, which is a very important part of investing crypto. And if you don't know what I'm talking about, you need to look at something like my Bitcoin Investors Launchpad course, so you do understand that. But yeah, just a simple saving strategy. So if prices goes up, you buy less Bitcoin. If prices go down, you buy more. And when you hit your target allocation, that's it. It forms part of your overall investment portfolio. It's part of your longer term investment portfolio because Bitcoin is volatile. It does go up and down a lot. You don't want to buy this and then look to sell in 6 months. You can if you want, obviously, but it's something you want to have at least a 3 or 4 year time horizon at least. And it might get to the point where you never sell it. This is one of the potential end games. And I'm not going to say this is guaranteed yet because it's not. But if Bitcoin does go on to displace the US dollar as a global reserve currency, then you probably would have a part of your Bitcoin holdings that you would never sell. You would just keep it as a long term, savings vehicle, and you can withdraw against it. You can borrow against it in the future. You can do that now even, and you can live off the proceeds, but you never sell the underlying asset because why would you? You've got a part of the world's global asset, which has never been possible in the past. You are the Fed essentially. So that's an interesting potential outcome. I'm not saying that'll be what happens, but it is one of the possibilities.
Yeah, man. All right, well, we'll leave it there because I've got a few other questions, but it could go on and on. Do take a read of Ryan's article today. It's completely free. The link's in the description below. So let us know what you think. Cheers. Thanks, Ryan. Thanks for tuning in to Fat Tail Daily. If you're ready to take a new approach to building wealth, avoiding the same old mainstream ideas and investigating new market trends, then make sure to hit the subscribe button and turn on post notifications so you don't miss a single video.